Let's get the spoken word on shipping now from our Chief Equity Strategist, John Blank, who joins me via Skype. John, you're seeing something positive going on in the shipping industry, aren't you? You're focusing on a particular part of the shipping industry, in fact.
Yeah, Terry, what we've got a story going on here is a top 10% Zacks ranked industry, heavy transportation. And we have not seen this in years. And this is a big industry. It's 30 companies or so. It's a big one. And a lot of these companies make the available to the shipping market super large tankers that are shipping oil and natural gas, liquefied natural gas. And what this is, Terry, is a kind of a triple play on the energy market story in the United States. And we all know energy prices are falling, and oil prices are now closer to 90 than they are 100 on most days because of this North American production build. But what this is doing is, and why it's a triple play, is it's taking down natural gas prices in the United States such that it still makes more sense to liquefy natural gas and ship it to Asia, which is then creating tanker demand, LNG tanker demand. And there's a company called TK LNG that's doing quite well. Zacks ranked #1 stock. And all it's doing is shipping LNG, liquefied natural gas, to Asia. And then on top of that, Terry, you've got two other parts of the story, which is shipping the oil itself from North America out, which is almost unheard of 6 years ago. Now that's taking place. So you've got massive oil tankers that are moving oil off the United States and around the world on a global trade story. And the third part of the tale is the tanker cost, what's called voyage cost, Terry. Voyage cost is falling because they run on oil themselves. So the actual ability to make money on these multi-year contracts or these super large ships is all about cost, and your cost goes straight to the bottom line. And so there's a bid on the earnings side of these companies because the voyage costs are falling because of energy costs are falling. So it's LNG, it's oil, and it's voyage cost.
Knightsbridge Tankers Limited, another name you want to throw out there?
Right, Knightsbridge Tankers Limited. This is a small company, maybe 50 million in revenue. But Terry, 5 years ago, 6 years ago, 7 years ago, this company offered a quarterly $1 a share dividend.
Wow.
So this was an incredibly profitable business. Now it's at 17 cents a share, but that's still at a $10 a share price, offering you 7% return. So this is a stock that if you like income, you've got a 7% return. And if you buy this triple story of energy, LNG, and voyage cost, Knightsbridge is making money. And that's where I found that voyage cost on display highest, is in they had 7-year contracts, and 7 years ago they set the prices a lot of on their supply, and the cost has fallen down on the oil.
So shipping has always been an economic barometer, John. So what is this particular shipping story saying about the economy?
It's telling us a lot of things, Terry. It's telling that there's been a transformation in the trade activity, that patterns of trade, not only the volume of trade, which we know is going up, but the patterns of trade are changing, and they're getting more advanced country to advanced country. It used to be, Terry, that you had Brazil and Indonesia and these countries shipping us raw materials. So now you've got raw materials leaving from the United States to go to Europe and Asia, and we haven't seen that in many, many years. So that's what's happening, Terry. We're seeing changes in the flows, internal flows.
All right, that's the spoken word on a particular segment of the shipping industry with our Chief Equity Strategist, John Blank. With John, I'm Terry Ruffalo.